we've had quite a lot of news coming through from the banking sector. Let's start off with the fact that Sanlam is now buying a 35% equity stake in First Bank of Nigeria Insurance Company. Your view on this, and of course it is interesting news because it has now been confirmed at this stage.
Yes, it is interesting. I mean, what's happened now is that the insurance sector has been undercapitalized in the recent past in Nigeria. There have been some reforms in the sector to recapitalize it, and there have been a lack of products, especially in the life sector. I think this deal to bring another life company into Nigeria, I think it mirrors the deal UBA did with MetLife to form a joint venture to provide life insurance products in Nigeria, and this should help. I think the big issue that Sanlam will bring to the deal is the technical expertise, because actuarial science is not really fully developed in Nigeria, and those sort of skills are lacking. So I think that's the kind of skills and technical expertise that Sanlam will bring to the process.
Exactly, and the management team also under the spotlight. How do you think that is going to be playing out? Because it seems that the managing director of FBN, Val Juma, might be taking up top job as well at the merged entity.
Yeah, considering that Sanlam's stake, I think, is about 35%, and the majority will still be held by First Bank, it goes to show that First Bank will probably choose the MD. But what we'll probably see is that in some more technical areas, like some of the technical heads, there probably might be people seconded from Sanlam leading those areas. But I think it'll be a relatively strong management team and can take the joint venture forward.
We also had First Bank saying it won't form a listed company, holding company just yet. Tax implications seem to be the problem for now. How do you think that is going to play out?
I think First Bank are just being cautious, and which they have every right to be, and I think all the other banks as well, because CBN announced this draft policy, which they asked for comments from the banks. The draft policy has been widely circulated about this move from the universal banking license to the holding company model, but the real nitty-gritty detail of how that's going to be done has not been detailed, because it doesn't involve just CBN, it involves other agencies such as SEC, the CAC, NSE, and that all of them have to come in and put the procedures and process for this to be done, because there are tax implications, there's shareholding implications, there's listing implications, there are loads of implications that have to be spelled out before banks can make this leap.
And we know that Central Bank Governor Lemido Sanusi has been planning to do away with the universal banking model. Do you think that his plans will be met going forward, that it is going to happen at some point, or do you think that we'll be seeing many problems such as this one arise?
I think the main issue a lot of potential critics to changing the banking model have is they agree that, yes, you want to protect depositors' funds and stop depositors' funds being used for more risky capital market and investment banking operations. But the idea is that, to be honest, on the universal banking model, one of the big issues was a lack of proper regulation. And even if you change the model, if you don't have effective regulation, you will still have problems. So I think what investors are looking at is for CBN to be fair, have tried to do is step up their regulatory activities. But they want to see some changes within CBN as well, because you've moved the bank, the senior bank MDs of the distressed banks for some of their actions, the alleged actions. You've done some changes in the sector, but no one has really seen any big changes apart from reorganization of departments in CBN in terms of personnel to hold anyone accountable for the lack of regulation in the sector.
Unity Bank came out with results in yesterday's session and cut its 2009 pre-tax loss by 1.3% to 21 billion naira. We also know it's a company that has been viewed as very weakly capitalized. Your view on this company, and do you think that there is light at the end of the tunnel for Unity Bank?
Unity Bank is in urgent need of capital. I think that is clear. I mean, CBN in October 2009, the only reason they gave for not taking over Unity Bank, as it did some of the other banks, was that it was very liquid. And their liquidity is because of its strong relations with a lot of northern state governments, which provide a lot of deposits for it. I think the latest results showed 21 billion naira loss in 2008, another 21 billion naira loss in 2009. Shareholders' funds of 7.2 billion when they require 25 billion to CBN shows that they are in serious need for capital. And CBN has given them to end of June to raise that new capital to go back over 25 billion. Now, the rumors that they've applied to the stock exchange for a rights issue to try and raise about 28 billion naira. And they've also hinted that they're in talk with investors strategic investors to come in and inject some capital. But I think that capital needs to be in the bank before the CBN deadline for the bank to actually get on an equal footing and start moving forward.
Well, Olukayode, very quickly, we saw again coming through in yesterday's session. We know that the markets have been under pressure for the last week or so. Where to from here? Do you think that there is going to be a very big focus on earnings?
I think the focus will be on the banks that haven't released their results, and most of them are the rescued banks. I think what you'll see is that everyone's waiting for those results because they're late at the moment. And everyone wants to see how bad those banks are, how they fared 2009 full year, and their Q1 results to see are they back on a more stable playing field. I think that's where the big focus is at the moment.